Welcome back. You're watching the Citizen Business Center. Now, real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. These are famous and now controversial words by the 30th U.S. President Franklin Delano Roosevelt on real estate. But with annual investment returns of over 25%, that's actually 5 years, within a span of 5 years, investors say real estate is foolproof in the Kenyan market. However, some say it is growing based on speculation. So, is it boom or bust? We have in studio Edwin Gandhi, the CEO of Untitled Investments, who will give us his outlook for 2016. Let's quickly have a look at his profile, which informs this particular discussion. Edwin Gandhi is, of course, the CEO of Untitled Investments, and the managing partner as well, with over 15 years experience in diverse financial services. He holds an MBA from the Wharton School of the University of Pennsylvania and has worked at the Bank of America, of course that's in Wall Street, as well as the Lehman Brothers, Merrill Lynch, and of course Britain. Thank you so much, Edwin, for joining us tonight. Well, of course, your name really featured the most when Untitled was embroiled in what was called corporate Kenya's fiercest battle in 2014. And of course, we'd like to hear more about that. But first, I'd like to talk about real estate, something that Kenyans, we say, are obsessed about. According to your report released earlier in the week, real estate seems to offer the highest investment compared to some of the major asset classes that, we regularly invest in. That's the stocks, the bonds, and the T-bills. And it shows investment returns as high as 29%, while the others are way below 12.3%. What informs such high returns? Thanks a lot, Terry. And if you look at returns by asset class essentially means options to invest. There's shares, there's fixed income, there's real estate. If you look at returns over the last 5 years, real estate has returned roughly 25% per annum, mainly determined by capital appreciation on such things like land. Then you add dividend yield, you get to around 28%. If you look at the other asset classes, stocks and bonds, they've returned roughly 12%. So the data is there. Over the last 5 years, the person who's made the best return is somebody who had exposure to real estate. What determines that? A couple of things. First is just the fundamentals. Kenya is growing. If you look at what's happening in countries like the US, 1 to 2% GDP growth. If you look at Europe, 0 GDP growth. China has a lot of issues. So where can you find growth? It's in Africa, 5 to 7% GDP growth for the foreseeable future. Africa has 3 centers of growth: Western, Southern, and Eastern Africa. If you look at the 3 centers of growth, the most diversified is Eastern Africa, and the jewel within Eastern Africa is Kenya. So we might not see it, but we sit in a country that is the envy of the world, and that helps with all investments, but particularly real estate. All right. Critics, however, of real estate have created a debate around the housing deficit, which in the country, and they say it revolves around the possibilities of investors putting money in due to speculation, and they say, the industry is about to experience a bust. They say there's more sellers than buyers, and the basic economics, say demand and supply, and they say in this particular market there's more supply than demand. Do you agree with that? Yes and no. Yes, to the extent that in any investment you always have ups and downs. Luckily for real estate, we've not had downs. All you can have is a slowing down on the rate of growth. For you to have a bust like what happened in the US financial market, you need a real estate sector that is heavily driven by borrowing, heavily levered. That's the word we use in finance. And if you look at our real estate sector, there's very little borrowing. A lot of the real estate is still cash. If you want a loan, it is still very hard to get a loan. It's not accessible. So it is very hard to have a bust in a real estate sector that is very cash driven. There's a lot of equity, real investment in this construction and real estate sector. So I don't see, when you look at the data, it's one thing looking at listening at the stories, but if you look at the data, there is not a single thing that indicates bust. The demand is there. There are years when the demand will not be as strong, therefore capital appreciation and yield will not be as strong, but we don't see any indicator of any bust. I would love to see the data. Mm-hmm. I mean, some stakeholders in the industry and some who we spoke to here on the show a couple of weeks ago actually said the majority of people who are buying into property are investment companies, perhaps holding them for speculation or whatever else is it. So who's really buying property in Nairobi? We do
a lot of research, Terry, and the latest research we've done is in the suburbs of Nairobi, places like Athi River, Rongai. In a place like Rongai, if you look at who is buying, around 75% of the buyers are not just buying, not even for investment, they are buying to live there. So yes, there'll be a section of real estate where people are buying to invest, and that is important because not everybody can afford a mortgage. So if you want to live closer to town, let's say Kilimani, Kileleshwa, Ruaka, most of the people who live there will actually be renters. So for you to rent, somebody has to be an investor. If you go to the suburbs of Nairobi, places like Athi River, Rongai, those guys actually buy a plot over a period of time. They construct over a 2 to 3 year period. So a lot of the real estate that is being bought in the suburbs are people living in it, and those who are buying to invest, they are playing a crucial role because they are renters who actually want to live in those houses.
Where is the real deficit for housing? And this is, of course, intended to inform those who are looking to put money into the property sector. Where is there a gap?
The gap obviously is at the bottom of the pyramid, and that's a big opportunity. A lot of real estate has been constructed for the top end. The issue though with the bottom end of the pyramid, and that's where most of the Kenyans are in terms of affordability, the issue is creating a product that people can afford. That's an opportunity that we are really pursuing, and a lot of real estate investors are pursuing. If I were to just deviate for a second, if you look at some of the brands that have really done well, and I'll mention two, Safaricom, Equity Bank, they've done well by focusing on the bottom of the pyramid. Safaricom started selling airtime in 20 shillings. Equity Bank went right to the bottom of the pyramid. Whoever then can develop a product for the bottom of the pyramid, there's a lot of wealth to be created, and also social impact, because when you create a product that's affordable, you allow more families to have homes. So the gap really is in, I would say, homes that would cost anywhere between 4 to 8 million Kenya shillings.
All right, let's look at that bottom of the pyramid, as you call it. And I was reading that you've got a 49 billion shilling real estate pipeline, and 85% of that is actually in that lower end of the pyramid. But my question is, how much will it cost somebody to buy a house if within that 85%?
Yeah. Now, at the bottom of the pyramid, we have to be more innovative. They have to start by buying land, buying a plot. So if you're talking places like, let's say, Rongai is the latest place we've been doing research, you'll spend anything between 800,000 to 1 million shillings to get the piece of land. So you have to buy that over a period of time. When you look at most people, they bought it over 2 to 3 year period through savings and through installments. Then they take another 2 years to actually construct the house. So the house would cost anywhere between 2 to 3 million. That's how you get to your 4 million. If you do it all together as a developer and then ask the people to come and buy for 4 million, it gets a little harder. So we are working on products whereby either through banks or through just installment payments directly to developers, people can then afford houses at around 4 million shillings per piece.
Is there a real market for premium or high-end property, in this country, and who exactly is that market? And the reason I'm asking that is when you look at property magazines or newspapers in Nairobi today, some are even, quoted in euros, in pounds, or in dollars. Yet we live in Kenya. Who are they targeting? And I also know that you have a property in Karen which goes for about 100 million shillings, or you're developing a property that goes for around 100 million shillings per home. Who's going to buy this?
Okay. First of all, the developments we have in Karen that are going for $1 million or 100 million shillings per property are 80% sold.
Who's buying this?
It's a variety of people. Let me just give a backdrop. Kenya is a place that is a regional hub. You have Kenyans, but you also have places like the UN headquarters that is headquarters here, you have global brands like Google, you have Yahoo, so you have also, and you have a very active private sector, so businessmen, entrepreneurs, so it's a whole variety of people. I would say majority of them are entrepreneurs, people who own businesses right here in Kenya. What's driving them to Karen? Karen has the biggest population of private schools, so that attracts them to that. So I would say generally high-end Kenyans, wealthy Kenyans, some are entrepreneurs, some are foreigners, and some could be politicians.
All right, politicians. Interesting, and 100 million is quite a bit for any Kenyan to invest in. Anyway, as we wind up, Edwin, what would your advice be to somebody who's looking to invest in real estate for the first time in 2016?
I would say take a long-term view. Look for products that give you an option to buy over a long period of time, whether it is a mortgage, whether it's arranging an installment plan with the developer. Start what you can. If it's a plot, even if it's a plot for 300,000 Kenya shillings, if it's $500,000, get it, pay it over 5-7 years, then take the next step, do the actual construction, but talk to an expert, because the issue a lot of people have with real estate is they have land where they don't have titles, the land has issues, sometimes they can get title, but you get the land in the middle of nowhere, there's nothing you can do with it, you can't even access it, there's no road, there's no water, there's no power. So try to talk to an expert who will help you select real estate that is in a region that is growing, that is supported by research and demographic data. All right.
Yeah. As we wind up, and before I forget, we've got to talk about Britam. And of course, a number of yourself and a number of your colleagues left Britam sometime in 2014, I believe. You were accused, or there were allegations that 3.9 billion shillings was taken away by you and your current partners. What led to the decision for you leaving Britam?
Let me ask you, Terian. You think people can take 3.9 billion in a company and just walk away with it? I mean, is it like it's stored in a wardrobe or in some truck or whatever? I think many people have different ways of reacting to competition. Myself and my team, and I think we are a pretty good team, decided that it was time for us to go practice the business of investment in a separate platform. We incorporated a company, we named it, and we are running on with our business. Yeah.
What is your current relationship with Britam?
Britam is a good brand. I had a good time while there. We grew it, the business we were running, and you can go check with them. We took BAM when it was 20 million shillings in profitability. By the time we were leaving, it was 300 million within 3.5 years. I like the brand. Myself and my team, we built Britam Asset Managers, so I have no issues with Britam at all.
All right, thank you so much for joining us and for giving us your thoughts. Apologies, our studio is a little hot tonight. And this is Edwin Gandhi, the CEO of Citon Investments, giving us his thoughts, of course, on real estate investment and giving us some clarification on the issue at Britam. Do join us after the break.